Good morning, folks. We're getting started in just about 2 minutes here. Good morning, folks. Hope everyone out there is having a good week so far. Certainly got some decent CPI data this morning. Nothing terribly disconcerting. A little hotter year over year on headline, a little cooler month over month on core. Overall, markets seem to like that data. We're climbing up close to that key 6,300 level on the S&P cash index ahead of the open, which is just under 29 minutes away. That is a big level to watch here, that 6,300 SPX. There's a lot of options positioning around that level. It could create a little bit of a ceiling. So we'll be watching that as we go throughout the trading day. And this morning, it was interesting to get CPI in on Tuesday morning. Don't typically get it on Tuesdays. So we're watching also just the overall reaction function to CPI. And so far, again, markets are overall bid outside the Dow 30, which is down just a little bit, down about 0.1%, but S&P implied open about 0.4% higher, NASDAQ about 0.3% higher. So welcome to this week's edition of Back to the Futures, live order flow analysis using Bookmap with me, Markets and Mayhem. It is Tuesday, July 15th, 2025, and we are really in that summer trading environment. You can feel it by just how there's not a whole lot of volume or determination in a lot of the moves that are happening in the broader market. And we also have a lot of the lower quality components of the market rallying. So you get these short squeezes. That's why I like to say 'tis the season to be squeezing, because that really has been the vibe of this market. You've got a lot of hedge funds that got very, very, very overextended into their favorite shorts. And as a result of that, you have a lot of these things now moving the other way because they got way too aggressively short into some of these names. So it's just something to take into consideration. That's been one reason I've been playing a lot of these short squeezes, is because you've got folks that have no choice if these things move against them but to cover. And then you've got folks like us in retail and other funds that are chasing that momentum in these same lower quality companies, because when they squeeze, they run real fast. So that's going to be a theme. We'll be looking for some more of those opportunities this morning to see if there's anything like that on the radar. And quick disclaimer, just be careful out there. Don't risk more capital than you're willing to lose. That's the biggest thing that I want to tell people that are trading. You know, I understand the idea of wanting to get rich and, you know, make money and not have to work anymore. That's all well and good if you have reasonable goals, you're patient but ambitious, and you're realistic about the timetable to get there. Don't go all in on red or black. That's the point. A bit about me. I've been trading for 20 years. It's been an incredible journey. I love finance. I love economics. I love building tools for trading and systematizing my process more to take the emotion out. So that's one of the things that's really been a big game changer for me from when I started to where I am now, is really taking a much more systematic approach. I know that some folks can trade more discretionary and do just fine. Don't let their emotions get the best of them. For me, my approach has always been, you know, I would say for at least the last 17 of those 20 years, leaning more systematic and more as time goes on. And I become more, I would say, proficient with learning how to code a lot of this stuff, learning how to build these systems, how to backtest certain trends, and then finding ways to capitalize on it as those setups come in. And one of the things I see a lot of traders do is they always want to kind of have skin in the game. My thought is the opposite. It's actually much more about being a sniper, not having positions on unless the setup that fits your system comes into play, and then very tactically executing that trade and getting out and moving on to the next one. So instead of always feeling like we're part of the market, and I get it, it's part of that dopamine cycling addiction. It can even lean a little bit into gambling. But on the other side, if you really do want to win at this, if you want to become more consistent and you want this to be something that is a wealth building tool, then it's a lot more about tactical approach. The other thing I would say is it's really important to roll those profits. So if you're doing really well trading, and I'm having a great year, it's been phenomenal, I'm rolling profits into my long-term investments. So for my day trading account and my swing trading account, when they get above a certain threshold, I take the excess and I roll it. And the reason I roll it is because that's a really good way to be able to always have that money working for you in other ways, rather than just increasing the amount of money that you're trading. Sometimes the better and even the more advantageous approach is to invest that money elsewhere, whether it's in stocks or real estate or even building businesses or otherwise. A lot of the time when you're doing this trading, those profits can be rolled into other things that can generate more wealth, passive income, etc. So that's something to really think about wherever you are in your trading journey. What is your goal? Is it realistic? Can you get there? You know, that's something that I really think that folks need to take into consideration, because I see a lot of the folks that I coach and otherwise trying to grapple with this while they're trading, and it's really important to already have a sense as to what this looks like before you start trading. Just like you should really have a system in place, knowing what your risk and your reward is before you start trading. And I know that kind of goes against the grain of the, some of the folks that want to say you can just, kind of lotto and Lambo your way there. But if you do get lucky enough to do something like that, are you going to be able to keep the capital if you don't have the discipline? And for a lot of the people that I see out there, they're not able to do that. They generally hurt themselves over time. I don't want that to happen to you or anyone else that, is out there really learning how all this works. So that's part of it. And so we're going to move right into some of the options levels that we have here. This is from the SPX Options Visualizer. And I would say for today, the big level that I'm really watching again is this 6,300 on SPX, where trading right above it. So we're kind of wall hopping into the market open, which is 22 minutes away. And what I mean is you had that call wall at 62.70 based on yesterday's flow and positioning. We are implied to open higher than that. So that's a bit of a wall hop, which is constructive. That's what you want to see. But at the same time, we could see a fair amount of absorption around 6,300 SPX. We're trading at an implied 62.95.30, up about 0.4% ahead of the market open. And these are some of those same levels for the NDX or NASDAQ 100 cash index. So watch as, sorry about that little errant pop-up window there, but watch these levels here on the cash index as well. So I think that we could see some resistance at those upper key levels. The call wall, key 3 and key 1 are areas to watch pretty closely. On the downside, on both of these charts, make sure you watch that volatility trigger level as well, as if we do push below that, markets can start to get quite a bit more volatile. And that pivot for today for me on SPX would be that 6,300 level, which is about 6,340 in ES. Now, the folks at Bookmap would like to remind you they've got that Pro Trader webinar series with a new edition, how to use Bookmap's liquidity heat map. I get a lot of questions about this. This is free. You can check it out on the Bookmap Discord under the events section. And they have a lot of great educational stuff, including this stream every Tuesday at 9 a.m. So be sure to set entry on your calendar and join me regularly. And if you'd like to jump on the Bookmap Discord, it's as easy as visiting discord.com/invite/bookmap or scanning that QR code on screen. Finally, if you'd like to get up to 40% off of Bookmap, use this exclusive deal for your first billing term. Visit traderaid.com/bookmap. That's traderaid.com/bookmap and scroll down to the special offers. And with that being said, we're going to dive right into the namesake product here, Bookmap, and take a look at what's going on in these markets ahead of the open. First, I'll say we've got some pretty big pre-market movers. Kingsoft Cloud Holdings up 17%, VNet Group up 16%, the Trade Desk up over 13%, GDS Holdings up 12.5%, MP Materials up 11%, CoreWeave up 8%, Bitmine, Immersion Techs up 7%. So a lot of big movers, even AMD and NVIDIA each up around 5% here ahead of the market open. And NVIDIA getting some relaxed or some degree of relaxation, I should say, on their ability to send these H20 chips over to China. So that's been received as positive for NVIDIA. That was one of the risks they had identified as to what could cause further losses in their revenue. So turning this around the other way and being able to export those again is a good headline for the company. And a headline that came through just now, Trump set to outline AI priorities in speech asserting the edge of the United States. Officials are preparing to release AI action plan this month. The address on artificial intelligence is planned for just about a week and a day. That'll be July 23rd on Wednesday next week. We also got consumer Redbook year over year in, and it came in at 5.2%. The prior reading was 5.9%. We do have a Fed speaker, Bowman, starting at 9:15 a.m. Wells Fargo earnings call at 10 a.m. Citigroup earnings call at 11 a.m. And just a lot of speakers throughout the day. The Energy Secretary speaking at 11:10. White House Crypto Czar David Sachs at 11:45. Fed's Barr at 12:45. Fed's Barkin at 1 p.m. Trump to speak at an energy event at 2:30 p.m. Fed's Collins at 2:45 p.m. and Logan at 7:45 p.m. So prepare for a day with a fair amount of different cross currents in the headlines. That's really the key takeaway here. And let's zoom out just a little bit on the price action. We can see the S&P overnight. We had a bit of a pop, settled on that, and then now we're getting back to those same highs and even pushing a little bit higher post-CPI. This is that call wall now at 6,300 that we're watching this morning, and we can see why that's an important level. This is a level where the vast majority of S&P call positioning is just overhead, and that can act as a layer of resistance. So it's something we're going to want to watch closely in today's trading. Let's take a look here at gold as well. I imagine the reaction function in gold was not positive, and indeed it wasn't. You can see that we had a pop into the data, but then from there the reaction has been one of turning into a bit of a microstructure downtrend of lower highs and lower lows. I still believe gold is consolidating. I don't think these moves are unhealthy, but certainly still something to watch. If you're an intraday trader on gold, might be leaning more into the sell side today. Let's take a look at the NASDAQ here ahead of the open as well, just with the overnight session in mind. And a very similar look. We had that overnight pop, then the drop that followed, and then we're taking out those same highs here this morning as a reaction to CPI. Yeah, I'm just taking a look at some of the futures this morning. So NASDAQ now bid up about 0.7%, S&P 500 0.4%, Russell 2000 small caps about 0.2%, and Dow just about flat ahead of the open. And I think there's a decent chance we get some upside continuation today, but we're going to watch the flows, that intro 20-minute opening range, and in particular, that call wall. That call wall is really my pivot. If we can break above it and build some acceptance, I think we've got some chunky room higher to make yet another all-time high. And we're just about 11 minutes from the market open here. We're just going to take a look at an hourly chart here, the S&P 500 futures, as we get close to the open. And you can see we're pushing up to some pretty big levels here. There hasn't been much volume built above here because we really haven't been above here. So this is an area where price exploration is, in my opinion, it's best to identify key levels using the options market. And that's one of the reasons we're also watching that call wall so closely, because we don't have market generated info really above here. So, that's what we've got to do. And we zoom out, we could see that this is really the high of the highs that we've been to. So there's a lot of volume profile right around here. We've consolidated here. We're kind of, back to that range we were in February, building above it. That's healthy. And it does look like the market wants to continue higher. We also see strong momentum. We're above that 21-week moving average. But if we zoom into this hourly chart, we can see that overall, we don't have a lot of conviction here yet. So let's see what happens when we get to the market open. The first hour of trading is generally pretty decisive. So that's what I'll be watching pretty closely here for signs of continuation, particularly if we can jump above that call wall. And folks, if you have any requests, charts, things you'd like me to look at or otherwise, let me know in the chat. I'll be checking around the chat rooms here. And good morning, Scott. Good morning, Justin. Hope everyone out there is having a good week so far. Let's also just take a quick look at gold over a longer term chart. Here's a daily chart for gold. And this is, it's kind of got a bit of a similar look in the S&P, as it's just consolidating around this high volume node where folks really like to transact in gold. There's been a lot of back and forth here, but overall, this is healthy. This is sort of digesting that big move higher with gold up over 25% year to date. You want to take breathers. And so seeing this thing sort of chop sideways for 3 months is telling you it's like a coiled spring. It's building up momentum, likely for a continuation higher. And the longer it coils, ultimately, the longer that move is likely to be when it resolves. So overall, not much to not like on the gold chart here. Now let's see if we can pull up a chart of silver. Silver's really taking the lead. And if you recall my navigating the markets from June, one of the things that I talked about was I thought gold was going to hand the reins over to silver, and silver was really going to make that run. And certainly we see that playing out as gold has been chopping sideways for about 3 months. Silver is now making new multi-year highs. I'm thinking silver can get back to those 2011 levels around $48 an ounce, possibly as soon as later this year, if not early next. But silver's really got room to run here, in particular if China does do some of that more aggressive stimulus, because that's one of the big things this metal has been waiting for. It's been waiting for more industrial demand, and China is the second biggest industrial consumer of silver. And we do see pre-market here that we're getting close to that call wall. So I'm going to get back to S&P as we're just about 6 minutes away from the market open. And that's a pretty good amount of aggression. If you look at the heat map, one of the things to take away immediately, the size of these bubbles. These are delta volume bubbles. So I know a lot of folks ask, well, what am I even seeing on the heat map? These bubbles show you the aggression of one side or the other. So the larger the green bubble, the larger the aggression by buyers, delta being the difference between buy and sell volume. So you can see there's a fair amount of aggression on that move higher. And so once again, we are testing that call wall level right ahead of the U.S. market open. Seeing a little bit of a rejection here, but what's going to be really important is to see how this trades post-open. Let's take a look at the NASDAQ. NASDAQ also seeing some strength, but not quite the same level of volume-driven conviction that we're seeing in the S&P or the SPOOs. Let's also take a look at some of the resting liquidity. You see a pretty chunky resting offer up above around 63.50 as well. So there is interest in higher prices in this order book so far. Fed's Bowman is speaking live now, so we may get some headlines out of that. Latest two are innovation in the financial sector is playing an important role. He does not comment on monetary policy or the economy, or she, I'm sorry, in her opening remarks. We also got Empire State Index data earlier this morning. It posts the first positive reading since February of 2025. So that's pretty good news. Recapping CPI, June CPI came in cooler at core and headline largely in line, yearly just a little bit warmer than expected, but not a lot. Unpacking this data, we're looking at down into the details. The shelter index increased by 0.2% month over month and accounted for the bulk of all items' monthly increase. However, the index still slowed from May's 0.3%. Owner's equivalent rent, or the rent of primary and the rent of primary residence were steady. Core goods rose 0.2% month over month, accelerating from May's unchanged reading with tariff impacts in focus. Core services accelerated to 0.3% from 0.2%. Elsewhere, new vehicle prices fell 0.3%. Goldman expected them to stay steady, and used vehicle prices dropped 0.7%. Goldman expected to see a bump there. So interesting to see that drag from vehicles as well. And market open in just about a minute, 30 seconds here. Good morning, Inspirational Mindset. And Eduardo asks, hi, what about the Greeks visualizer of SPX? It's an add-on of Bookmap. Correct. It's a data add-on that you can learn about by visiting traderaid.com/SPX. That's traderaid.com/SPX. It's called the SPX Options Visualizer. It plugs into the Cloud Notes function and allows you to add this column on the right that shows both positioning and, when we are trading, flows that may impact market price discovery. So let me know if you have any questions about that. You can always reach out to me, mayhem@traderaid.com. That's my email. And we'll be having options visualizer tools coming out for the NASDAQ, for the Mag 7 stocks, for SPY, for QQQ, IWM, etc. Those will be available soon. We have betas of those on our Discord right now, but they'll be available as Bookmap add-ons soon as well. And just getting another headline, JP Morgan and Citigroup bump up full year net income guidance. Wells Fargo guides down. So a bit of a mixed bag from the bank earnings. Markets are open now. We can see initial rejection at the S&P 500 call wall. And I've got a question about silver from Shamrock. Good morning, Shamrock. Shamrock asks, could you update on us on how silver is looking this morning? So we did look at that, but I'm more than happy to go back in and look at that one again. Give me a moment here. So here's silver on chart for you, Shamrock. And what we were talking about a little bit here was how it's really outperforming gold. So gold's kind of chopping sideways over the last 3 months. Silver, since June, has had this big breakout. And if you recall that June Navigating the Markets that I did, I talked about silver really taking the lead and being more excited about that than gold for the near term. And certainly we're seeing that play out. I still think silver has about another $10 of upside here. And I know that sounds like a lot, but $48 an ounce was the 2011 high. And I think silver has been lagging so hard that now we're at that stage where the bull market in gold is maturing, such that silver and the miners of gold and silver should really start to take the reins in terms of their performance. And a big variable is also, does China stimulate in size? If they do, because China is the world's second largest industrial user of silver, and industrial usage is the biggest demand center for silver, it's actually not investment, it's really industrial usage, that's going to have a big impact as well. So I'm still constructive on silver. I think after the move it's had, it's probably going to consolidate a bit. You can kind of see when it has these big vertical moves, it tends to chop sideways for a while. So I wouldn't be surprised if we get some consolidation before continuing higher. But the path of least resistance for me in silver is indeed higher here. I'm looking for this thing to get to $48 an ounce either later this year or early next. So some consolidation and continuation is what I have on my roadmap so far. And the big downside risk there would be if we had a real large economic slowdown globally, industrial usage of silver is going to come down. That would be bearish for price. But so far, that doesn't seem to be a big risk here. So hopefully that helps, Shamrock. Back to the S&P chart here, you can see we've retested that call wall once again and are rejecting here. And folks, if you have any questions, charts, things you'd like to learn about Bookmap or the options visualizer or anything else, just let me know. Always happy to help. And we're seeing JP Morgan shares up about 0.8% after they posted their earnings, and they are, I believe they just wrapped up their conference call. And that is a tidy little rejection at that call wall. You can see both right ahead of the market open and then after the market open, we had 2 attempts up there. Now we're moving lower to a new session low on S&P 500 futures. We'll zoom out just a little bit here. We can see yesterday's levels of SPX call-driven demand. They're quite a bit lower from here, and the puts, that was a pretty narrow range into the close yesterday, but those are some of the next levels to really watch on this chart if we're going to have some downside continuation. That key 1 level, which has confluence with the point of control, would be the one that I'd watch the most closely, around 63.10. All this is playing out over there. I'm just going to take a look, see if we have any interesting stuff going on in the potential squeezes playing out. I'm going to add a stock called CELU. It looks like it may be a squeeze candidate here. Want to take a closer look at what's going on there. So we'll grab that and backfill the data. Just let that do its thing real quick over here. And then let's take a look at that over here as well, just to see if there's anything interesting in this. We'll zoom out to a weekly chart. So you can see this thing may be trying to put in a really long-term bottom here. Lots and lots of activity around this area in the volume profile on this weekly chart. And then zooming in on a daily chart, you can see it's trying to push above that high volume node. So certainly a bit spunky. It's up about 8% here, getting back up to prior highs where we've seen resistance at CELU. I got to say, I'm not super thrilled with the way that one is trading, though. It's getting absorbed pretty heavily by sellers. So I'm going to pop off that one. IWM, that's our Russell 2000 small caps, the favorite instrument of hedge funds to short in the macro products. This thing's also getting walloped a bit this morning. Seeing it roll over really even before the market open happened. And you can see yesterday's big level, the most active call strike around 223. If we do start to push below that on IWM, that does give us some continuation lower here. Let's take a look at Triple Q. I know we like to look at NASDAQ futures, but it's also good to look at these ETFs. You can see this one also has its own wall of calls here around 560. This morning we opened above it, but now we're starting to see a retest and rejection of that level. So again, these options visualizer levels can be quite handy, especially when you're in market structure you haven't explored before, or you have, but only a little bit. So Shamrock asking about SVM. So I will say, we had SVM as a favorite at TraderAid. I talked about taking profits on that one after the move it's had because, I mean, let's be real. This thing has had an extraordinary move. So let me just bring this chart up here. And you can see why I wanted to take profits. We're basically back to some of the highs we saw in late 2024. And last time we had those highs, we saw management. If I recall correctly here, and you guys can correct me if I'm wrong, but if I recall correctly, they started offering more up here. So they were doing some dilutive share offerings. And so I'm a little kind of trepidatious about getting too bold around the same levels again. So I'm more inclined to take profits, look for some opportunities elsewhere. I'd rather be long silver, the commodity here. So for me, I like to trade the futures contract because you get preferential tax treatment. There's no wash sale restriction. You have 60-40 treatment on gains, and you can trade it basically 23 hours a day. And the reason I like that is if there's a real big move against me and it's happening the overnight, I'm likely to stop out with a better price than where I might get in the ETF the next day where it opens again. And I really also don't like having stops trigger in the pre-market that starts at 4 a.m. with those things, because you get crazy orders all over the map that may stop you out in a move that's not even real. Like if someone just decides they really want to sell silver, they smack that bid, then your stop gets triggered at market, that smacks the bid, et cetera, et cetera. You can get some weird stuff there. So I'd much rather be in the futures contract. And there's micro contracts for silver too, so you don't necessarily need to have an enormous amount of exposure. So hopefully that helps, Shamrock, and I appreciate what you said. Shamrock said, thank you so much for your commentary. You are such a help for so many of us who are just figuring all of this out. That's exactly why I do what I do, by the way. I really want to help folks wherever you are in your trading journey. If there's something I can share that can help you to have better odds of success, to fill in the blanks so that you know more about what's going on around you, etc., anything that can help you get better at this game, that's what I'm all about. So really happy to hear that. And then Joseph is asking about ENVX here. Let's take a look at ENVX and then we'll zoom in. Oh, look at that. We're right at my green crayon line on ENVX. So this is the area where I was talking about wanting to take profits. It's such a big area of implied resistance that I don't necessarily want to be the guy who's deciding whether or not this thing moves higher. I don't have that kind of control of the market. So you could see the last several times this happened, it wicks above and then it fails. So I'd be reticent to expect anything different. Obviously, the more we knock on a line like this, the more likely it is we break above. Above here, I'd be watching about 1670, 1680 as the next decision zone in this more low volume pocket. But overall, the squeeze factor in ENVX is kind of playing out a bit with the move that we've had and the duration of the move. So I wouldn't be quite as excited about seeing continuation based on a short squeeze. Now it's time for the momentum traders to try to take this thing over and push it. And if you can get a weekly close above this green crayon line, this trend line, I would be much more constructive on it. At that point, I'd think, okay, we can get back up to this node. That's going to be the next area where the market gives us some information about whether it wants to continue or not. But for now, we're peaking above there. I'm just a little more hesitant. I think the bigger chunk of the move, the easier trade, is already over. And now it's going to be a little bit more volatile. And, you know, if the prior trend continues, you could have a hard and fast rejection here. So it's a really important spot for ENVX, which is continuing to push higher. It's up now 6% on the day. So we can see it pushing higher even as we're talking here. And let's zoom into ENVX using Bookmap as well. So give me a moment. I'm just going to pull it up, and then I'm going to let it backfill some of that overnight data. While it does that, we're going to take a look at the S&P again here, continuing down from that rejection off the call wall, and now getting below the pre-market lows that we saw just ahead of CPI. So there's that pre-market low ahead of CPI. You can see we're pushing below there. Remember, we talked about these volume bubbles. This is a lot of seller aggression. This is, 1, 2, 3, 4, 5 bubbles of pretty intense seller aggression, 4 of them in a row. What that's showing you is that buyers really are nowhere to be found to try to defend this move of yet. They poke their head in, and then sellers take control of price action once again and push this thing lower. You do see a very small amount of buy-side iceberging happening here, but nothing yet to grab my attention. Let's take a look at ENVX and Bookmap. You can see off the open had a nice pop and now just sort of consolidating those gains. And overhead, the big level of offers to watch would be about 23,000 at 16 and then 39,000 at 18 on ENVX. Let's go back to the S&P futures here, and that CELU trade we were talking about earlier, it's now up about 7.37%. I still think it's a short squeeze candidate. I'm just not super thrilled with how it's trading. Plus, it's a $2 stock. I don't tend to get as involved in those. And a little more iceberg buying coming in, about 21.79 net. Also hearing MP continuing to have that incredible bid. I believe it was yesterday or the day before. No, I believe it was yesterday. It was up about 50%. I don't think that was the prior week, but it all blends together. And MP Materials now bid up 18%, continuing higher, up 57.45 here. That's the last trading price, up about $9. As we hear, Apple is now going to be investing a large sum in rare earths as well. You're welcome, Joseph. Dow just turned negative, down about 0.3%. S&P futures up about 0.25%. NASDAQ, the leader so far today with some strength in semis in particular. NASDAQ trading up 0.6% here. Still watching this key one point of control confluence area on the chart pretty closely. But we do see some tepid buying coming in, led first by some of these passive desks, iceberging. But this is not a lot of conviction yet. So let's see where we go from here. Suffice it to say, we've had 2 rejections at that call wall off of a relatively decent CPI reading. And that market function of removing hedges after the data, I think we can safely say a lot of that is over. I talked about that in a preview note for Trader Aid members, saying that skew wasn't elevated enough to really give us too big of a pop off of the data, that we could get some pop, but it wouldn't be quite as pronounced as what we may have seen in the past, particularly later last year. And Shamrock saying he's been trading SLV for the last 2 years and didn't know you could trade futures. Love the idea of using stop with those because I woke up holding my breath in the morning. Yeah, hoping there wasn't a big swing of the price. I know exactly what you mean there. And by the way, that's something that a lot of traders kind of, go through the machinations of having these swings and volatile instruments and right sizing their position so they're comfortable with the potential risk they're taking. Now, one of the big advantages of trading commodity futures or just futures contracts in general is you have that venue that's open basically 23 hours a day. And so the ability to manage your risk with trail stops or hard stops is so much better because you're not in a market that's closed for so many hours where a lot of big moves can happen. And on the other side of it, you may also be able to realize rewards in that. And we talked about managing risk overnight. That's cool. But what about managing your rewards? That's the other thing to think about when you're trading futures. Because let's say you get to one of your price targets overnight. Well, if you're in the ETF, you can't realize that. But if you're in the futures, you could have an order set up where it closes a part of your position or the full position at a target price, or it stops you out if your risk is exceeded, that sort of OCO order. That is really helpful for these types of swing trades because the way I trade, I'm trying to set some kind of exit for at least 2/3 of my position. And then usually I'll let the other third run based on momentum, like using a moving average or using a Bollinger Band squeeze breakout or something else I can qualify to keep the rest of that position on. So the idea of using futures to manage risk in commodities or equity index exposure or even sectors, They're sector future contracts. They're not the most liquid things out there, but they're great for swing trades if you're willing to, go through that process versus using just the ETF versions of the same, which are more liquid but have far less trading availability in the after hours. So for me, it's a game changer. When I started to trade futures more and more, I realized that that was something that I really always wanted to have as a part of my trading strategy. The other part of futures that's really helpful is their capacity to help you hedge out a portfolio. I mean, look at what these hedge fund guys do. And I'm not saying mirror this at home by any stretch, but what they've done that's worked quite well for them in aggregate is buy things like the Mag 7 and then hedge out that exposure using the Russell 2000 and lower quality stocks that tend to underperform the broader market. Obviously, you have these episodic squeeze episodes where everything gets bid and that works against them and they have to degross or take down their leverage. But that's been a technique to kind of have your long conviction plays and then your short to reduce that leverage. So just think about that in the utility that futures and, quite frankly, options can have in hedging out risk. That is to say, you don't have to be, up to the nose long. There's always ways to reduce that risk. Obviously, raising cash is the easiest way, but there are other ways too if one wants to maintain that same positioning. And there's really, like we were looking at these bubbles before, that's not a lot of conviction. There really wasn't any aggression from the buyers. So now we just made a new low. Seeing buyers try to step in a little more here on the active side, not much on the icebergs or the passive order flow. And for folks that aren't familiar with what an iceberg is, because it's often discussed in terms that don't reflect what it actually is, an iceberg is an order where you're not showing your full size. And so what happens is, let's say I've got 5,000 S&P 500 futures contracts to move. I may only show 250 of those contracts on my offer. And I might have an iceberg order that can go through that cycle 20 times to get to that 5,000. That's what an iceberg is. It's a specific order type where you're showing less than you want to move. It's kind of like playing poker with the market. The real reason you're doing it is you're not trying to show size that's large enough that it may move the order book. And so this can be really helpful even if you're not a big account. If you're trading smaller stocks and your broker has iceberg orders, that can help as well. You'll notice if you watch the order book closely, when you put a large offer relative to the size of the order book in anywhere, it tends to run away from you. So icebergs can help you be a little bit more stealth. And that's exactly why some of these larger desks use them in things like the S&P 500 futures. An iceberg is not just a large shelf on the volume profile. That's just a lot of transactional data. It doesn't necessarily imply with any surety that it's actually an iceberg that's transacted there. That's why I like the ability in Bookmap to see the iceberg order flow from NBO. You're actually seeing where they're happening, which side, buyers or sellers. And so I have that all set up. And if you guys want to mirror these settings at home, so you only see the more important icebergs, you can set up your on-chart icebergs. And the way I like to do it is an interval of 90 minutes. So that's 90 minutes of sample data with a standard deviation multiplier of 10. And so that way you're only really seeing the ones that stand out. That can be quite helpful. And then I do like to color code them. So you make the sells red, make the buys green. That way it stands out right where it is. You don't have to process above or below. It's just right like that. And then, you can make the icon size just a little bigger so it stands out on your chart. So then you can see those popping up where there's icebergs, where there's stops. Like you can see these stops popping up here. But here's an iceberg sell of 130, and here's an iceberg buy of 1626. And you can do the same thing with your stops as well, which I think is a good idea. So you go into that same add-on setting, stops and icebergs on chart, the visual settings for your stops, right? And you're going to want to have those at 90 minutes for the standard deviation interval, 10 for the multiplier, And then if you'd like, you can increase the size of those icons and color code your buys green. The sells are already red. And that way you'll have a pretty easy indicator to see where these things are happening. And then if you want to clear up these semi-transparent icons, the ones that are showing when it doesn't qualify for your filter, you can get rid of show filtered icons as well. So you just uncheck show filtered icons on your visual settings for icebergs. You could do the same for stops, and then that'll clear up your chart, and you'll really only see the bigger flow. So that, for me, is helpful because you can even set in those same settings audio alerts that will tell you when an iceberg or a stop of sufficient size has triggered. So you'll also have some kind of indication to look at your chart. Then you'll have the visual cues right here as to where those had transpired. And then finally, if you want to clean up those vertical lines that you see where there's an aggregation event, you can do that as well in the settings. You could take off the show aggregation lines, and that will get rid of those vertical lines that you see when there's aggregation. Now, you should be connecting your computer using a wire to a high quality connection, and you don't want to have too many plugins running at the same time. If you have a lot more instruments, that can also increase the potential for aggregation. But outside of all that, you know, it's usually helpful on your chart not to have any more clutter than you absolutely need. And then once you're done with all that, you can click Save Workspace, and that saves your settings for the next time you open Bookmap. And hearing the euro is getting hammered versus the dollar here, lowest since June of 2025, but still euro very much structurally in an uptrend for now, which almost sounds strange to even say that, but we are where we are. And price action in futures kind of starting to base here. Seller aggression has tapered off. You have seen at least one aggressive buy from the icebergs and some decent sized stop runs as well. So now we want to see if there's any reversal before looking for longs. Also worth noting that the overall options flow here looks like it's a little bit more on the bearish side. I'm just going to go ahead and, yeah, we've got a lot of put flow building below. And this is after the event vol catalyst. So, you know, you've got folks looking for downside risk protection or speculating on downside after CPI. So that's also interesting. This is earnings season. It just officially kicked off today. So maybe some of this hedging flow has to do with that. But worth watching that there's more aggressive demand for puts below us here. And Trump says that they just made a deal with Indonesia. He described it as a great deal for everybody. And in just a few minutes, a Wells Fargo earnings call is going to start. Remember, they guided for lower net income. They may have some headline risk coming out of that call. We'll see what they say. And just about 2 minutes left on the stream. If you want to learn more about my work, visit TraderAid.com. We've got a number of awesome trading tools, including the SPX Options Visualizer, which you can learn more about at TraderAid.com/SPX. That's what's powering this right column of options flow and positioning data. It's an add-on for both Bookmap and MotiveWave, and we'll be bringing that add-on to more platforms, as well as that same data for the NASDAQ, QQQ, SPY, IWM, and the MAG 7. Those data feeds will be available soon as well. Then we also have an awesome Discord with ongoing analysis, actionable trade ideas, and we've had some killer swings and an amazing community. So feel free to check us out, and also check out Bookmap. If you'd like to get a 40% discount, visit TraderAid.com/bookmap. That's TraderAid.com/bookmap. Scroll down to the special offers, and you can get up to 40% off your first billing period. We do see S&P futures now just making a new low as seller aggression picks up a little bit, and so does the put flow below. Again, seeing a decent amount of more aggressive put flow below us here. And making another low here, another session low in the S&P 500 futures as that put flow below continues to grow. So it is becoming more likely we get pulled down to that gamma 1 level and possibly that most active put strike. And I know that seems quite a bit lower from where we are now in terms of intraday range, but it's becoming more likely here as that flow intensifies and as the intraday market structure is weakening with a trend that also suggests lower highs and lower lows are the path forward for now. Sellers have been the most aggressive on the tape this entire time. You can see that from the market open until now, those larger red delta bubbles showing seller aggression. So I would be careful managing that risk today. I think we do have some room lower, and I don't think that necessarily puts the whole trend at risk for the S&P, but at least for today, you've got folks that are motivated to take some profits, to hedge out some risk. We've got earnings season starting as well. One of those three banks that reported today, Wells Fargo, had some concerning data in their net income, and that earnings call is starting now. So just be careful out there. I would look for a proper reversal if you're looking for longs. Right now, we could still have, a chunky amount of room lower, possibly all the way down to 62.85 on the S&P futures based on how these options are trading. So thank you for tuning in to this week's episode of Back to the Futures with me, Markets and Mayhem. And we'll be back next week, 9 a.m. Eastern on Tuesday. So I'll look forward to seeing you then. And I'll also be covering some of those major earnings, particularly after hours as they come through. So look forward to those live streams as well. Thanks, everyone. I'll catch you soon.